All right, let's talk about a very interesting IPO hitting the Hong Kong market, Impression DHP. Now, on the surface, this company looks fantastic. It's got a simple, beautiful business model tied to one of China's most famous tourist destinations. But as you know, our job is to look past the pretty picture and see if the numbers actually add up. So let's dig in.
So what's the story here? Well, it's actually pretty brilliant, and it's been summed up perfectly like this. They are basically a mountain and water landlord. They've taken the absolutely stunning scenery of Zhihui Mountain, built a massive outdoor stage, and now they charge tourists to watch a show there. I mean, it sounds like an absolute license to print money, right?
Okay, so here's our game plan for this deep dive. First, we're going to look at that irresistible landlord story. Then, we'll peel back the layers and look at the two very different realities of their business. After that, we dive into the financials to find the devil in the details, uncover a hidden tax that's draining value, and finally, I'll give you my straight-up verdict on whether you should subscribe to this IPO.
All right, let's start with that story, because honestly, it's a really good one. The company's main gig is this huge outdoor performance called Impression DHP. It's directed by the world-famous Zhang Yimou, and it happens right in the middle of the Zhihui Mountain scenic area. It's pretty epic.
You know, just think about it from a tourist's perspective. Millions of people flock to Zhihui Mountain every year. They spend all day hiking, taking pictures, but then the sun goes down. What do? Well, that's where this company comes in. They've basically got a monopoly on the nighttime economy. For most tourists, this show is the only game in town. Talk about a captive audience.
Okay, that's the beautiful story. But, and you know there's always a but in investing, this is where things start to get a little tricky. The simple story hides a much more complicated reality. This company isn't a well-balanced machine, it's more like a performer trying to dance on just one leg.
And wow, here is the first massive reality check. Just look at this chart. In 2024, nearly 95% of all their money came from one single thing, the Impression DHP show. All their other businesses, like a hotel they run, they're not even a rounding error. They're basically just noise.
So this breaks down into two completely different stories. On one hand, you've got the show, which is an absolute money-printing machine. We're talking gross margins over 60%. But on the other hand, you have their hotel. And it's not just a deadweight, it is a cash bonfire. I mean, a negative gross margin of over 140%? That's not just losing money, that's actively setting it on fire.
So what does all this boil down to? It's what I call the triple dependency risk. The entire fate of this company rests on one show, in one location, using one brand name that, get this, they don't even own. They just license it. The whole thing is incredibly fragile. Any problem with any one of those three pillars, and the whole business could be in serious trouble.
Okay, so the business model is shaky. Now let's do what we do best and follow the money. Because on the surface, this company generates a lot of cash. But the real question, the one that matters to us as investors, is where does all that cash actually go? Just take a look at this number, over 73 million yuan. That's the amount of cash paid out in dividends to the current owners in the 2 years right before coming to the public market for more money. And here's the kicker, that number is almost the entire net profit the company made during that time.
So you really have to ask yourself a very serious question here. Are we being invited to invest in a healthy, growing cash cow? Or are we being asked to buy a company that has already been milked completely dry by the insiders right before they sell it to us? For me, this is a massive, massive red flag.
And the red flags just keep coming. In 2014, nearly a third of their revenue from ticket distributors came from unverified third-party personal bank accounts. Now, why is that a huge deal? Because you can't trace it. It's an auditor's nightmare and a huge no-no for internal controls. Now, they claim they fixed this, but the fact that it was happening at all tells you a lot about how this place has been run. So, we've got major business risk, we've got serious financial red flags. Now, let's talk about governance. Let's talk about who's really pulling the strings, and more importantly, who's really getting paid. This brings us to what I call the hidden tax on this company's revenue. First off, let's be crystal clear about who's in charge. You see that giant slice of the pie? Over 78% of this company is owned by a local state-owned enterprise. That means if you buy shares in this IPO, your influence, your vote, it's basically zero. You are just along for the ride, and you have absolutely no say in what happens.
And this right here is the killer detail.
The director's creative team, which is a related party, has a deal where they get about 10% of all ticket revenue. Let me repeat that. Revenue, not profit. This money is skimmed right off the top before any other expenses are paid or any profits are calculated. And this deal has no end date. It is a permanent cost.
So what we're looking at is a classic related party transaction. And whenever you see one of these, you have to be extra careful. It's a deal between the company and an insider. And while it can be legal, it's often a way to systematically pull value out of a company, value that should be going to the shareholders, like you. It's a permanent tax on your investment.
Okay, let's put it all together. The view at Wuyu Mountain is stunning. The show is probably spectacular. But as an investment, the landscape is absolutely filled with risk. So it's time for my final verdict.
Look, you can boil this whole thing down to two competing stories. The bulls will tell you, hey, it's a monopoly, it's a cash machine. And yeah, on the surface, that's true. But the bears, and I'm firmly in the bear camp on this one, see something completely different. We see a company with no real growth prospects where the value is being systematically siphoned away by insiders before it can ever reach public shareholders.
So, for all of those reasons, when you weigh everything up, my verdict is simple and clear. It's a pass. A hard pass.
And let me be super specific about my strategy here. I am not putting a single dollar into this IPO. The risks of the insiders taking all the cash, combined with the fact that the entire business depends on just one show, it's just way too high for me. Now look, if you're an aggressive trader and you absolutely have to play, the only conceivable strategy is to flip it immediately in the gray market. Get in, get out, and run. But honestly, my capital's going elsewhere. There are far better opportunities in the market right now. So I want to leave you with this final thought, because this company is the perfect case study. When you hear an investment story that sounds perfect, simple, beautiful, a can't-miss opportunity, what's the very first question you should always ask yourself? It's simple. Who is really getting the money? Always, always follow the money.